Then from that, supposed to pick the financial, you're supposed to pick the data and summarize your work. So I will share that data. I will share that data on the chat. So you just download from chat. This was a question that was done one of the past papers, that is on May 2012, question 1A, CPA section 1. So you can download that worksheet. Then in WhatsApp, you also download the same worksheet. If you're not connected your computer with the Zoom, you can get it through the WhatsApp. So I'll send it in the group. Just download and open the worksheet. So I hope you have the worksheet now. So if you have the worksheet, you can confirm whether you have this worksheet. Confirm that you have the worksheet. Then we'll proceed. If you have the worksheet, then you can proceed with that worksheet. So down here, this is data from a specific company here. The data was referred to as, this is the trial balance. It was extracted from the books of this Saidizi Limited for the year ended 31st December 2021. So we are given a number of these. And then down here, we had some additional information that the closing inventory was valued at 44,000. We had, as at 31st December, the prepaid insurance at that amount. Accrued audit expenses, we have interest on debentures, depreciation. Interest on debentures has not been provided. We have depreciation was provided as follows. We have the plant and machineries. The rate per annum is 10% on cost. The motor vehicle is 15% on reducing balance. Then we had what else? We had the office expenses at 10% on cost. Furnitures and fittings, 10% on cost. So then another additional information was given here that the directors, that is the director had recommended the following. That is 100,000 to be transferred to general reserve. Then the dividends on preference shares to be paid, the payment on 60% dividend on ordinary shares. Then he had allowances of doubtful debts. And we had that first on directors that 4,000 to be enumerated from to these directors. So you ignore the depreciation on buildings. So the building, so to ignore the depreciation. So what is the required? The required, you're supposed to prepare an income statement for the year ended December 2011. Then the statement of financial position. So those are the two details that you're supposed to prepare in these worksheets. So you said the first thing, because of time, is to set up the right process, you need to have the right format. So, and in that worksheet, we are going to formulate that format on this side. So I'm going to give the format, and then we will discuss on the values. We'll pick those values from the format given, provided, Then from there, you see how you achieve this statement. So the first thing that you need to indicate, you always start from the income statement for the year ended. So how do you write it? You can merge some cells above here. Select some cells here. You can have like 1, 2, 3 cells. Merge those cells. Then you type income statements. Year ending and year ended 31st December 2011. So that is the first thing you need to indicate the title of your statement. And after the title, then you indicate what? You will start with sales. You'll indicate the sales. Then always sales, we always less what? Cost of sales. If it is provided, you have to indicate that. Then again, you have the opening inventory, that is opening stock, opening inventory. You have purchases, have carriage inwards, have return outwards, and we also have goods available. We are supposed to calculate the goods available for sale. Goods available for sale. And once you get the good available for sale, then finally we will compute, we will less the closing stock, which was given under the additional information, less closing stock. So just normally the way we do this is to pick records from our data. We pick record from our data using the referencing technique. So remember that this amount is supposed to be given in what? In thousands. So I'm going to indicate that one here, that it is in shillings, and you have to indicate that this amount they were in millions. So you have to indicate that whatever you are going to type here will be in form of thousand, the 3 decimal places, 3 values, that is indicating the 3 values. So that is the first thing you indicate. Then from there, we'll take the sales. So if you check from our data, the sales were provided somewhere from this data. So you can compute that first part very, very fast to get the gross profit. And we'll take the sales by picking the value with sales on a sale. So that is, we say equals to the sales. We we'll get the value of sales. We don't have the cost of sales, but we have the opening stock. So where do you get the opening stock from our data? The opening stock is stocked at 1st January. So you can say that this here is our opening stock. Then finally we have purchases. The value of purchases were given just below the inventory. So you just pick that value there, that the purchases were given as 800,000. Then the carriage inwards was given again just below the purchases. We have the carriage inwards. So you just pick carriage inwards from here. Then returns, but return outwards supposed to be treated how? They're supposed to less, because return inwards is supposed to reduce our sales. You can actually write it here, but in negative form, or you can even have it here, but now you take it as negative value, because the return outwards we were given somewhere the return outwards as 20,000. So you just take that return outwards, supposed to be taken as a negative value. Then after computing all this, you're supposed to compute the goods available for sale. So the goods available for sale, we'll take the opening stock, the additional stock that we purchased as the carriage inwards, then less outwards. So you can use a simple function, sum, to sum the above values. And using the sum, automatically, it will reduce what? The return outwards. It will reduce the return outwards. So that is the first part. Then you are given down here under the additional information that the closing inventory was valued at 44,000. So you're supposed to indicate that closing balance, that it was 44,000. So that you give the value of the closing balance. And once you get this, then you can compute the value here that will take our cost good available for sale minus or less, or you add or you less the closing stock. So that is to get now the exact goods available for sale. So you take equals to the goods available for sale less the closing less is minus the closing stock, and the amount that you're going to get here, it will help us to get the gross profit. So how do you get that is a gross profit? So we have the gross profit. So, and we'll get our gross profit. So how do you get the gross profit? You take the sales, then we less the goods available for sale. That is the amount we get here. So we can compute this one by picking the value of sales above here, then we less the amount we get here, and you give us the gross profit. We are given some other income investments according to additional information. There was amount that was under this, that is the investment, income from investment that this company had invested. And if you check from here, you'll get that the income from investment was 4,000. So which you can add here. So you just pick that 4,000 from our details there. So, and we have that you have those details, then you can add them together to get now the total of this. So you say equals to this amount you got here plus the income from investment. You can indicate here that this was income from investment. Income from investment. So you just indicate that there. You are at the first. These guys are not. Wait. Is it okay? Okay. There was a problem in sound. We apologize for that. So we had, okay. Someone was asking about the return outwards. Repeat how you get the return outwards, if possible. And we said that we were given return outwards. It is just simple reasoning that this business had an opening balance and an opening stock of this amount, and they bought more stock for this amount. So, but there between, some amounts were returned back. Is it we return? We are returning is we return out. So that is, we actually returned some of the purchases we bought, we returned them. So by returning it means we are deducting from our stock. So that way we did minus there. So I hope that one is clear. Supposed to return back. When you turn back, then you less that, because you don't have that stock actually. You just returned it back. So the insurance, I've just said that under the insurance, actually the insurance was given. If you check here very well, you'll find that the insurance was given as 8,400. And we said that it's always important to consider additional information. Down here, we are told that they were prepaid insurance amounting at 1,400. The reason why we're using 1,000 because we already equated above here that the amount is supposed to be in millions. So, meaning that you take the insurance, right now the insurance will be how much? The insurance expense, you are already paid in advance, 1,400. So if you less, then you find that the insurance expense as per now to be 7,000. The same case will happen to the salaries, that the values of salary were given somewhere. We are given the values of salary. And if you check very well, you'll find salaries and wages. Salaries and wages. Where are salaries and wages? You just select salaries and wages. They are here. So you pick that amount. But from the additional information you are told, there was prepayment. There was a prepayment of 2160. So you have to include that 2160 here. So you just type 2160. And once you do this, then you'll get, this will be the other way around. If you paid salary, paid in advance, the company paid the salary in advance. So that means now for salaries, you'll have to add. That is, there was prepaid wages and salaries and wages for that particular amount. So what do? You say is equal to the wages, salaries and wages. This was the amount here. Then you say plus 160, and you get that amount 120,000. Then the next expense, we had audit fee. The audit fee was provided, and you select type here audit fee, and you're supposed to pick the value of audit fee from our data. We have audit fee of 9,000. Then from the additional information is something we found here about audits, that as there was an accrual on audit expense, at least amounted to 1,000. So that is, you're going to add that 1,000 to get now the audit fee. This amount as 10,000. So then we are given the depreciation on plant. Let me see, depreciation on plant. How do you do that? Let's check. Yes, it was an accrual. So it's accrual, then how do you treat it? Then you have to, add. Then the next expense, given the next expense, we have depreciation on plants. So you indicate depreciation on plants. So we check very well, we find that the depreciation was given in our data. That is, you check above here, you'll find depreciation and depreciation. Let's check. We have plant and machinery at cost. We are given plant and machinery at cost. It was how much? Plant and machinery at cost was this amount. What we are looking for is depreciation. And from the additional information, we are told that down here, that the plant and the machinery depreciation was provided as follows. Asset is plant and machinery, 10% on cost. So that simply will take equals to 10% on cost, and the cost was here. So that is to give us the depreciation. Depreciation. That is the plant and furniture is depreciated at how much? Then you have depreciation on motor vehicles. Depreciation on motor vehicles. Again, now here you have to consider the accumulated depreciation. Motor vehicle provided under the accumulated depreciation. You can actually see here that this was provided down here. And there was this amount. Then again, is something else that you actually reduce that. And you're told down here that on motor vehicle, just look here on this additional information. For motor vehicle, it was 15% on reducing balance. So that means we type here depreciation. Depreciation on what? On motor vehicle. Depreciation on motor vehicle. Depreciation on also motor. Sorry. So, just a minute. So once you type, once you type this, then you have to include this. You have to type in a function that will help us to do that. First, we are told that there was 15%, 15% of what? Now there you take. There was 15% of what? Of the amount that was given. That is the motor vehicle at cost. Motor vehicle at cost was it's appearing. You have to start with equals. Then you say equals to this amount here. Then we less, because we are told down here that the accumulated depreciation at this time was this amount. So you have to less this, and we'll get this amount of 21,000. So then we have depreciation on office equipments that was already given as 10%. From the additional information, you will check on that. So, so the additional information number 4, which additional information number 4 states what? Okay, there this will be used. We will use this one on the balance sheet. That is the financial position, the statement of financial position. Now we come to use this there, but for now you have to include it. already included in our data. So we'll include it in our data here. So then let's check the next asset. The next asset we have depreciation on office equipment. So you just type depreciation on office equipment. So, and what about this? So here we're going to indicate the amount that was given as 10%. 10%. From additional information, we had that depreciation on office equipment was 10% on cost. Where are our office equipments? You have to check office equipment at cost was this amount. So you say, sorry, it was 10% of this amount here, and you'll get 5,000. Then depreciation on fixed furnitures and fixtures. Again, it was 10%. And under the additional information, you are told that it was again 10% of cost So you type here depreciation. So just need to copy this. Depreciation on furnitures and fixtures. So then we'll have this. We say is equal to 10% again of what? So 10% of furnitures and fixtures. Furnitures and fixtures. 10% on furnitures and fixtures. That's below the trade. So we have this 10% of that, you get 8,000. Then we have the bad debt written off. Bad debt written off. This was given. Debts. So we'll just pick that bad debt written off was 300. And again, we had the director's emoluments, and this was again provided in our data. But we have to add, because on additional information, we are given this, that is the director's what? More so it was actually provided, but in additional information we are told that we had to, so let's check there. We are told down here. So at this date, at 31st December 2021, an emolument due to directors was given as 4,000. So that means we are going to include it in this So when you say, since it was already provided, already provided in a specific cell, then y the cell say is equal to that cell is below the bad debt. So just select this. Then plus 4, that's 4,000. So you get the amount there, it's 4,000 that was provided. Then we had miscellaneous expenses. The miscellaneous expenses was provided already, just pick that. So just type here miscellaneous. So this one we just say is equal to the miscellaneous expenses was provided as 18,000. So then you had interest on debentures. Interest on debentures. Now you see that question you are given, you already provided this with this. So it is always important to include it here. That interest on interest on debentures. Interest on debentures. So it's already given, and we're told 5,000. And since we are told that it was 5%, if you check from above here, you'll find that 5% on debentures was 100,000. So meaning that if you take 5% of that, 5% of 100,000, which was given above here, then you get interest on debentures as 5,000. So that is with that, I will be able to compute our expenses. So we can even compute it across here. So what we say, we can say sum these values from here to here. And once you sum this, you'll get that specific amount. But after adding those values. Then you compute the profit before tax. Profit before tax. So someone can help us to get the profit before tax. Please compute that. Profit before tax, how do you get that? So nachukua the gross profit minus the expenses. And you get the profit before tax. So we can say is how much? 2971. That is, let's see. Let's say is equal to this minus the expenses. And once you do this, you get 29,700. That's good. So then we need to compute. We need to add something here. We need to add something we call the interest. Need to add here. I don't know how much you used to compute these interest. I want us to discuss that the income interest expense, income interest expense I don't know you use how many percentage to get income interest expense. What do you think we should do? What do you think we should do to get income tax expense? Sorry, income tax expense. What do you think we need to do to get the income tax expense? income tax, because we want to get now profit after tax. So how do you get this? You guys need to remind yourself on this financial statement. Remember that you don't take a lot of time on cash flows. Then you forget still there are other concepts. There are other concepts on the syllabus. Remember that these are concepts that is not yet tested. So the chances of getting that question is very high, very, very high, because the last time they did test several things about financial management. Now we don't know where they will look, whether they will check on the management accounting, or whether they will check on the financial accounting and reporting, or whether they will check on the auditing, of which auditing we are not very sure of how they can really formulate a question about audit. But the taxation is chances. We will do some question about taxation and you will get this. So someone is not getting profit before tax. Why? Okay, why is so someone has said 30%. That's good. Not quoted, but is given as 30% of that. So that is what you're supposed to use, 30% of the net profit. That is what you're supposed to use to compute the income tax expense. We will say equals to 30% of our net profit. And once you do this, you'll get that figure there. You'll get that figure there. So now we'll calculate, we'll compute the profit after tax. Profit after tax. Compute the profit after tax. So what do you get? Profit after tax equals profit before tax. So you need to indicate here profit before tax. That is a milestone. So you need to bold that a milestone. Now we are computing the profit after tax. We're supposed to pick another milestone. Have those additional information. Now the next part. So we have this, someone is asking, answer question on SRS audit fees. Okay, we'll revisit that one. Then we see how you did, because we want to finish up. We want even to do the statement of financial position before the time elapses. So below this, we are given other information like proposed preference dividends. We had proposed ordinary dividends. On the additional information, we are given the transfer of general reserves. Somewhere we are given, we are supposed to consider the retained profit for the year. We are supposed to compute this. Then we add the profit to get the retained profit carried down. So we will indicate first the proposed what? Proposed reference. Post preference. Yes, post preference. Proposed preference dividend. And yeah. We are told about this. We also have proposed ordinary dividends. So proposed, it was given as 6%. If you check from our data at here above here, we are told that the ordinary shares that we had 6% preference on shares. And here we had this amount here, and now we are supposed to pick the. Yeah, we're supposed to pick that 6% of 100,000. So that means we'll say that equals to 6% of the amount that were given. That is 100. That is 1,000. So we just pick that to get amount of 60,000. Then we have again proposed on. On ordinary dividends, proposed on ordinary dividends. Just pick this, say here that what was proposed on ordinary dividends, was how much. So again, it was provided somewhere from our data. Just below that, we are given 75,000. That is above the first item that we are given, and it was given as 6 again. It was given as 6%. I don't know whether what is displayed properly. So down there, we are given some additional information that the prepayment of 6% dividends on ordinary shares. Payment of 6% of ordinary shares. So that is, we are supposed to compute considering that 6%. So what do we say? 6% is on ordinary shares were given here 750,000. So just pick that to give us 45,000. Then some other additional information were given: the transfer of general reserves. Transfer of general reserve. And if you read down here, it was given that 100,000 to be transferred to the general reserve. 100,000 to be transferred from the general reserve. So you just type that because it was not in a cell. You just say equals to 100,000. You just type this value there. That is 10,000. And add another 100,000. Supposed to be like that. So then below this, now we'll be able to compute the retained profit for the year. Retained profit for the year. So we'll type here the retained profit for the year. So how do you compute this? First, you need to add this up to get the total of those three variables. So actually, given here, you can say equals to sum of this, and you get this amount over here. Then now to get the retained, another milestone to get this. Then you're supposed to pick the value that we got above here. Then you do what to the value down here? You're supposed to less. So you take the profit after tax minus those preference dividends and transfer of general reserves. So you say equals to amount minus this amount here, and you get this 29,70,000, and that is the retained profit for the year. You're supposed to add the retained balance brought down. So that is, you're supposed to pick that retained balance brought down. When you type that retained profit, not for the year, but balance brought down. So edit here. Brought down. So it is supposed to be, you're supposed to pick this amount in a specific cell. Was given that the revenue reserved at 1st January, revenue reserved at 1st January. You check this, that revenue reserved at 1st January, it was this amount. So if you pick this, you say is equal to equals to this amount over here, that is 30,000. Then you get the returned profit brought down or carried forward, the retained of profit carried forward. So you just copy this and you change here to carried stroke forward. Then it will be how much. So here, then you pick and we'll add the two values. So we'll say that is equal to the retained profit for the year. Oh, sorry. Retained profit for the year plus the retained profit brought down, and to give us the retained profit carried forward. So that will be another milestone, which you can set is in the format of the totals. That is under format styles, not there. Under the format styles, you don't have format styles supposed to be there. So under the format style, you can actually do that. Format the style to that total, or you can just double underline this. So that is the first one. Just double underline. What else do you need to double underline? The milestones. All the milestones, you need to indicate them here. Just underlining those milestones. That is, anywhere you did the sum of those values, we applied the sum function. Anywhere you did apply the sum function, you need to do that. So that is how you prepare this. Then you're supposed to proceed and compute the statement of financial position, and some of the data you'll get it from above, from what you have just computed. So we can still run that one either in parallel, or you can do it down here. So we just type there. You can merge the cells, merge cells. So then type statement. Start 31st December. 31st December. Then 2011. So position. That is another financial statement you're supposed to present. Balance sheet. The amount again is given in thousands, so you can just quickly sell, copy and paste it here. The amount is supposed to be given in thousands, and we always start with the non-current assets. The non-current assets. Non-current assets. Non-current assets. What do you say? Let me see. Down after question as per recommendation. So you don't have in exam. You said don't have to do it side by side. Someone is asking whether we should do it across here. The best way is just do it down. Even if possible, you can also do it down in your worksheet here. They just recommended to do it below your worksheet. But if a question like this one that requires you to pick data from here, then it is better. You do it from here. It will be easier to cross-check your work and confirm whether you have picked the right cell. So you can just need to do it here. So you start with the non-current assets. So here you can just write them down. You know the non-current assets, like the land and buildings. There's somewhere you are told that there was no position on buildings. So again, under additional information, you take that information there. Land and buildings. Land and buildings. Then number 2, we have plants and machineries. Plant and machineries. Plant and machinery. What else here? We have motor vehicle. Motor vehicle. We have office equipments. Have furnitures and fittings. Fixtures is what you are given. We are also given investment. We have to type investment here. As that is, those are non-current assets. Once you pick those values, then after setting all the non-current assets, then the next is to set up the current assets. So you work with assets first, then later we will check the liabilities. We'll check this. We have inventory that is stock. inventory, stock. We have trade receivables, trade receivables, receivables. And what else do you have? You have prepaid insurance, prepaid insurance, prepaid insurance. You have cash in hand, cash in hand. I hope you remember all these current assets. Have prepaid, repayments, repayments. Is this we have added here the trade receivables. Remember that receivables will be taken as liabilities, but here talk of trade receivables. So it's taken as current assets. Then you have the bank balance. The bank balance. So you add the bank balance that we have as per now. So once we do this, we take this, we compute the current assets, non-current assets. We're supposed to get the total assets, total assets. Now we pick the values from our data and we start with the land and building. Land and buildings. So these should not be affected by anything because we are told there are no depreciation for this on the additional information. So you're supposed to pick that value. Land and buildings, we are given this amount here to 20,000. You just pick that value there. Then you proceed. There is plant and machineries. Now this one you have to include the depreciation. You have to include the depreciation. So the amount of this one was given, plant was given above. So if you remember, this amount was given above here. That is for plant and machineries. At the cost was this one. So you're supposed to less what? Divided minus. So you're supposed to less the depreciation. You're supposed to less the accumulated depreciation for the first of. So you check in the bracket for the this first of January. We had this accumulated depreciation of this, and we had 2 because again we will add to what we computed. There's something we computed above here, the depreciation on plant. Depreciation on plant, which was 180,000. So we again add that. That is the depreciation that we computed, basing this depreciation on additional information that was given down there. That the depreciation on a plant was 10% of the cost. We are told here that this accumulated depreciation at this time had already depreciated at this amount. So we will get this as the cost of that particular asset, that is plant and machinery costed at that after depreciation. Then the motor vehicle, we're going to run motor vehicle 2, and again we use the same procedure. So the motor vehicle will say equals to, why the motor vehicle at cost? If you check at cost, the motor vehicle is costing us this amount. Then you're supposed to less in bracket the depreciation at this time was this 60,000. Then we add the depreciation that we computed here on our income statement. The motor vehicle depreciation is amount here, and we press the enter key. So we'll get that particular amount there. Then the office equipment, so just pick office equipment. We don't have much here. We're only given the office equipment here. Office equipment at cost was this amount. Then we have to less the depreciation, which we are told that additional information here that it was a specific percentage. That is, it was 10% at cost, and you get 45,000. Then you have the furnitures. Again, furnitures and fixtures. You pick again furnitures and fixtures at cost. At cost, where is these furnitures, fixtures at cost? It was this amount here. Then we less depreciation of furniture and fixtures. So we have to less this. It was given additional information that it was 10% of 10% at cost. That is 10% of cost. You get that amount. Then we had investment. This one is just pick. We are given that investment was around investment income. Investment, that is income on investment. We had investment. That is above here. Investment was here 80,000. Then again press enter. So our current assets will be equivalent to how much? Our current assets. Let's check. Compute our current assets. How much do you get? Our current asset will be how much? So you just use a simple function. Here you say sum. And sum above values. And you get check. So you'll get a specific amount here. Just a minute. So it's not necessary you compute, but that is the amount that you're going to get. If you add this together here, you get that amount. So the inventory, we are given inventory or additional information. You are told this, that the closing inventory was 44,000. So here, the closing inventory was 44,000. We had the prepaid expenses. Prepaid expenses, we found expenses, that is trade receivables. That is the trade receivables. Already given these trade receivables, we just pick the amount. Here, we are told the trade is payable. Trade receivables is here. Trade receivables here. Then you're supposed to less the allowable for doubtful debts. Somewhere we are told that that allowable for doubtful debts. So we have provided an additional information. The allowable for doubtful debts was this amount. But now here we already given that it was this, that is was 10,000 allowable for doubtful debts. So what do? We just less that. So you say minus the allowable for doubtful debts. We pick that amount there, and we get that 8,200. Then the prepaid insurance. The prepaid insurance we are given the prepaid insurance as 1,400. Cash in hand was already given. So this one you have to type because it was already given. 1,400. The cash in hand you pick from our data. That is cash in hand is above here. Cash in hand is 160. Then you have again cash at the bank, and cash at the bank was also given from that specific cell. You say is equal to cash at the bank was right here. So just select. Then finally you get the total assets. The total assets. And actually the best way is not even to compute this, because when you are here, you can actually get the sum of all sum above. You just say sum equals to sum above. Then how much will you get? Our total current asset will be equal to 2,289,960. Then we have the next milestone is to compute equity and liabilities. So you say equity and liability. Equity and liability. Equity and liability. So how do you compute this? We'll start by setting this common liability. So we'll start with ordinary share capital. We are doing the share premiums and retained earnings. So we start with ordinary shares. So we just type here ordinary shares, the ordinary share capital, and the ordinary share capital was computed here. Why do you leave this cell here? Okay, just a minute. So the ordinary share capital will compute these ones. We just pick. It was already given somewhere in our worksheet. That is the first item. So you say equals to ordinary share capital, ordinary shares. Then we will proceed. Next element, you're supposed to set up or to select the share premium. So the share premiums, again, it was actually provided, and we check on specific cell almost towards the end. You say it's already provided somewhere here. Sorry. So we get 40,000. Then we have the other item that you need. We need to have the retained earnings. Retained earnings. Type retained earnings. Retained earnings. And just picking the data. The first thing is actually to pick the data. You should not worry whether balancing or not. First, pick the right data. Then from there, we'll see what will happen. So the retained earnings, just select our retained earnings. Already given. Remember that we computed this from our previous statement, so you can pick that value from there. Retain the profit was this. So that is the retained earnings. So So you pick that value from there. Then we are given the general reserve, and in our additional information, the general reserve were given there. General reserve. So we pick the figure was 100. That is, we go back to our additional information. You get that given here, the general reserve 100,000 to be transferred to the general reserve. So you type it here, 100. Let me just type. Then you have 6% on shares. 6% difference on shares. So let's type 6% points on shares. Then, so this one again, it's already provided that was already given above there. So 1,000. As far as was given as how much? We just say equals to. Then we pick from the cell that was given that amount, so you select it from there. So then finally you get the non-current liabilities. Non-current liabilities. There we have computed on equity first. Then after this, you can actually subdivide this one properly. Start from here. This is equity and what? Equity, and then what do you start with? The equity. And these values will help us to get. Then from there, you proceed. Next is non-current liabilities. Non-current liabilities. So what do we have here? We have only one non-current liability. Have just one, that is the debentures. We have these debentures. So, and it was 5% debentures. You just type 5% debentures. So it's just one. So, and you're supposed to pick that value from our data. So it was provided, so it's supposed to be here. It was provided about 5% debentures. It was given us this amount, 100,000. So just pick that amount. So that is only the current non-current liability we have. The current liability we have a number of them. So we'll actually include them here. In our computation, you can do it. You can subdivide this. We have current liabilities. Here we have a number of them. So you list them down. So the current liabilities, you have the trade payables. Here we computed the trade receivables. At this point, it was treated as a current asset. Now here we have the trade payables, which is supposed to be treated as liability. So trades payable, trade payables. And how much was the trade payables? That one you pick from our data. You say equals to the trades payables. Trades payables, it was taken as this amount. Then after the trades payables, then we shall proceed to accrued the accrued audit expense. So you say accrued audit our audit expense. We have accrued audit expense, accrued salaries. So start with audit expense. So this one is supposed to pick the records from the data. So you just pick this from our data. The accrued, so what were the accrued salary? What was the accrued? These were provided on the additional information. We are told here that the accrued audit expense was 1,000. So supposed to type this 1,000. Then again, you provide the accrued salary and wages. So yeah, accrued here means accumulated, that they have been accumulated over a long period of time. You say that we have accrued salaries and wages. And we are told from additional information that we had accrued salaries and wages was 2160. So again, you type that figure there, 2160. Then what else were we given? We are told to the director's emolument. So here again, other additional information we are given this. So, and we are told this amount was 4,000 from the additional information we are told that the directors here that it was 4,000. So you type 4,000. So you just type here 4,000. And the next field, we are supposed to set the proposed dividends. Proposed dividends. Proposed. Dividends. And here, under proposed dividends, then you are given that check from what we computed. We had two proposed preference dividends and proposed ordinary dividends. From what we computed above here, from our previous financial statement, we have proposed deferred dividends and proposed ordinary dividends. So then you're supposed to do what? You're supposed to add the two. So you just move down there and add the two. So is equal to proposed preference on dividends plus the proposed ordinary dividends, and you get the total proposed dividends was this amount here. Then we had the tax expense, and you can also pick tax expense from what we got 30%. So we just type here tax expense. So we already computed this one above there as 30%. We just move and pick that amount from our data. So we got income tax expense. The income tax expense was this amount. We just pick that data from there, and that was our tax expense. Then finally we have the accrued debentures on interest. The accrued debentures on interest. That is the interest on debentures. So you can type here accrued debentures. Interest. Accrued debentures interest, and what do we say here? Then you're supposed to pick that value from the interest on debentures. You say is equal to interest on debentures. Interest on debentures. So we pick interest on debentures. Interest on debentures. So it was 5,000. So just pick 5,000. Put that amount under this. Then you're supposed now to get the total liability. So we compute this total liability. So liability. That is the final milestone, which are supposed to sum. Those amounts from where? Because you're supposed to start from the equity, because you're supposed to compute equity and liabilities. So supposed to compute from here up to here and get the sum of this, which will also give us the same amount. So and now set this as our next milestone. So this amount, the total assets and our total liabilities, will get that amount. So that's how you're supposed to compute these statements. Remember that if you're given a question like this, you're supposed to first start with setting the right format. So you just need to remind yourself on these statements, because they can bring a question from here and you're supposed to prepare. So it may look so easy when doing it on paper, but you need also to compute it. First, you need to have to master the format. Then from there, you can run the two. That question, first, you have to gain 12 marks, then 8 marks, then 20 marks. Every question should have 20 marks. So I'll give you several other questions about the statements, financial accounting, those statements to prepare the profit and loss, the balance sheet, the trial balance, the cash flow. You have to do a number of these so that at least you'll be through with this. So in our next lesson, we are going to discuss about the ratios. So you'll get another question that you help us to cover about the ratios, trends, and you also produce the graphs. So I'll share this solution there with you. Solution you have just performed here. Then you can cross-check your work, confirm what you have done. Then in the course of the week, I'm going to send you another question that you're supposed to do, the assignment. Then you send it through the WhatsApp. So let me share that worksheet. Somewhere on the desktop. So I'm sharing that worksheet. Just a minute. It's here. Then you go and just revise. You check where you maybe did the mistake. Then later you can use the same question to confirm with the assignment that I'm going to share with you. Then the questions, the theory questions, I'm preparing those question and answers from the two past papers. So as we discuss the theory, then we also discuss those questions and answers from the two papers that has been tested by CASNET. So I'm going to share again the theory book, but then after 1 week, we're going to get those questions and answers from the previous papers that were done. So I've shared this. I'll share it in WhatsApp. Just download from WhatsApp. Then confirm your answers. So today we are going to stop there. Someone is asking about the video, and actually the videos that we have are those videos that we record during these classes. So if you want to get the past videos, then you always get these videos. You just make a request from the office, then they will send you those videos. There's a way they're supposed to send you the videos. Just make a request and you get those videos. So today we stop there. Wish you a good night. Tomorrow check on WhatsApp, download the worksheet, the question, then you attempt that question.